Welcome back to Broad Guys Breaking Briefs here on DayTradingRadio.com. Before that song gets posted in the room, wondered if you recognize the voice. So, you'll see that post there in just a minute. I was taking a look at the patterns here, and I posted in the room a nice little bookmark that you could save from stockcharts.com, reference site that we go to quite a bit. And they've got a page in there on scanning for different chart patterns. And you might find that of interest. Now, we kind of talked during the day, some of the traders I saw making comments about today's candle on the SPY being a engulfing candle. Let me change this to a SPY here. If I get some cooperation. So we're looking at a daily chart here on the SPY, and I wanted to just confirm a couple of things. Now, on a strict definition of an engulfing candle is what you see on the screen. My concern is of the engulfing pattern and whether we truly have an engulfing pattern. And that's the part I'm trying to confirm. Now, I'll share with you my thoughts as I'm thinking them. So here's our SPY. Why don't we just go back to the SPX, because I don't think that shows these monthly profiles. It'll just give us a cleaner read. So I'll read to you from the Japanese candlestick author Steve Nison. This is from his book Beyond Candlesticks, under his section on engulfing patterns, and he makes this observation. The basic definition of an engulfing pattern is that the second real body must engulf an opposite color real body. Now, I've had this argument with some traders in the options room, and this is something he highlights even in his classes. Now, when it comes to 24-hour, nearly 24-hour trading equities, such as the ES, you can have them meet pretty much at the same level. Now, we're looking at the SPX, so the possibility of a gap up or gap down is certainly can happen, versus the ES, where for the most part you kind of have a smooth trading from one period to the next. So the point is, some would argue back here that this is a bearish engulfing candle, this October 30th candle. But based on this strict definition, it would not be. Why? Because the real body does not cover the real body of 1029. Today's example, technically you have that, because yesterday's the top of the body would be the opening price. So that amounts to 1765 even. And today's opening print, which is the top of the candle, is at 1770.74. So it's higher by nearly $4.26. Well, it's not dollars, but 4.26. So that checks off. But let's go on with the definition. However, not all engulfing patterns are equally important. The importance of the engulfing pattern is dependent on the relative size of the real bodies, the relationship of the shadows to one another, and other factors. For example, the strictest definition of an engulfing pattern would be if the first candle is small and the second candle very large. Well, we have that. And the second real body wraps around the entire first candle, including its shadows. That's one of the arguments that I get into, whether or not the shadows come into play. But again, by strict definition, I believe we have that here on the SPX. The high of yesterday's candle is 73.74. The high of today's candle is 74.54. So higher by nearly a point. The next strictest definition would be if the shadows of the second candle exceed the shadows of the first candle. In other words, on the second day of the engulfing pattern, the market made a higher high and a lower low. As with a dark cloud cover, if the market surpasses an engulfing pattern, it is said to go opposite to the pattern. This means that if prices close above the top of the bearish engulfing pattern, including the upper shadows, the outlook turns from bearish to bullish. Aspects addressed in this section's charts. Okay, so there's some other definitions, and then they give some examples. Now, one of my observations here when I looked at the patterns, and it's not just from looking at it today, but also from looking at it on some classes. And that has to do with an engulfing candle appearing after an uptrend. And my question is whether this is enough of an uptrend this past week. It is a move up. But you know what? We had, if you called this an engulfing candle, it certainly didn't last long. It was down the next day, and then we had this steady move up. And that's my concern. You know, we have these trend lines in here. We've really traded down to the 20-period average. And again, only a 1% retracement off these highs, 1.3% retracement off these highs. So another factor for me, anyway, in being cautious about these tops. So there's another pattern in his book called the last engulfing pattern. This is a bearish engulfing pattern. Let me back up. A bearish engulfing pattern is a large black candle that envelops a small white real body, and then in italics, after an uptrend. However, if a bearish engulfing pattern appears during a price decline, it has the potential of being a bullish bottom reversal signal. I'm just scanning the chart, scanning the notes here for something else. But let me read that again to you guys so you can appreciate this. A bearish engulfing pattern is a large black candle that envelops a small white real body after an uptrend. However, if a bearish engulfing pattern appears during a price decline, it has the potential of being a bullish bottom reversal signal. This pattern is known as a last engulfing pattern, or rather, last engulfing bottom. A last engulfing bottom. And I'm trying to follow his notes here. The last engulfing pattern is viewed as a turning point for the bulls if prices can close back above the black candle's close. Now, if I'm not mistaken, the black candles are the red candles. What we have is the red candles. A bullish engulfing pattern is a two-candlestick pattern in which, during a downtrend, a large white candle wraps around a prior small black real body. However, if during a rising market a large white candle engulfs the previous day's black candle, it's potentially bearish pattern, referred to as a last engulfing top. In candle theory, the bearishness of this pattern is confirmed if the next day the market closes under the prior white candle's close. The Japanese colorfully compare the last engulfing pattern top to double lover's suicide. This is because you fall in love with the market because of the last engulfing pattern's long white candle, but both you and the market perish together. These words might be a little strong, but they convey the cautionary approach traders should take after the emergence of a last engulfing pattern. And then he gives some examples. Alright, so I'll leave it at that. You guys can do your homework on that. I'm not going to tout myself as an expert in candles. I haven't even made my way all the way through this book yet, but I do respect the candles, let's put it that way. And I respect the patterns, and you've got to respect price. Now, some of the readings that I was looking at had 1747 as a level of support down here, and instead of breaking through it or bouncing off of it, we traded right to it. So in reality, we have to see what's going on tomorrow before we can make any final conclusions about that. Here's the SPY, which moved up a little bit after hours, but pretty much at this point is trading flat. Looks like we're up 2 cents from the close. Getting back to the E-minis, and you can see what we did in the extended session. Not much of a change there.